88% success rate. Write that down. 88% success rate. That's pretty damn near perfect. That means practically 9 times out of every 10 you will make money. Guys, that's crazy. Do this 10 times and only once you lose, maybe twice, but it's crazy. That is why, guys, when things are that high, you add them to your bread and butter bucket. Do you understand? I got a small handful of bread and butter plays that are so highly reliable that I play them heavily. And what I mean by bread and butter, they happen regularly enough to just be almost guaranteed money. The bread and butter or go-to play I want to talk about today is that crash into support. There are certain market environments where you can make your whole living doing just this. We are in that market environment. That's why I wanted to cover with you. We are in that market environment where you can make your whole living in the markets just doing the crash and go play. Now, it doesn't last forever, but it's prevalent now. This is one of the most valuable things you can have in your arsenal. It's like the clearing elephant bar off a flat 200 play. It falls into that category. The real bread and butter play is the one that crashes into an area of support. That support that it crashes into, it's coming from above support. So for instance, in this scenario I'm drawing now, it's crashing into the 200. It could do something like crash into a narrow state Fab 4. Boom, like that. There's your narrow state Fab 4. What we're looking for in this scenario is what I call the micro whale. Now, most of you should be familiar with the fact that we're looking for a 3-part move in almost every one of our trades. Part 1, the pullback is part 2, and the second part is the whale complete or secondary leg. But this is a micro whale where you crash into support, usually in one fell swoop. You bounce back up oftentimes, and then it crashes through the support. And that is a micro whale because that can happen inside of 2 minutes, and it can happen inside of just a couple of minutes. Whereas that your more macro whale will tend to happen over, a good portion of the opening period. Maybe it's over 15 minutes. Maybe it's over 20 minutes. Maybe it's over, 10 minutes, but it's not a few minutes. The micro whale is anywhere from 2 minutes to, maybe 6 minutes. Most of them are very micro in the sense that they are 4 minutes tops. 6 minutes tops. This play is a very short-term play. It can be played any time of day, but it's most prevalent right off of the open. I've explained this concept in the past as the wrecking ball concept, right? Because some traders are afraid to go into something right at major support. But Oliver, it's right at the 200. Yeah, I get it. But this was a wrecking ball that slammed into the side of the 200, weakening the 200 at its foundation. I don't know if you've ever seen that in the movies or on TV or even in person. When a building is being brought down by a big giant wrecking ball, the first swing sometimes does not break the whole building down. It crashes into the wall, it creates a hole, but it weakens the building at its foundation so that the next swing easily brings it down. So here's the weakening of the foundation, and a bounce is now the wrecking ball is swinging back, and the second one easily goes through and brings the building down. Okay, here, if you were to join this, you get this monster drop into the 200, right? Now, what's the odds of a bounce coming all the way back up like this is nothing? And the odds are very low, guys. Very low. Yeah, 1 in 10. It's very low. You know that pretty much any attempt for this to raise its head is going to be slapped back down. It's such a basic thing. When is the wall, when is the tower so tall, like it's like the Tower of Babylon? And you can pretty much see bounces aren't going to take this out. It's not going to happen. Here's a scenario. You guys see that? Now fill this in. This is when you don't eliminate the tail because that's where it started from. Doesn't matter how late. The odds of green climbing all the way back up here is, like Ari says, 1 in 10. And the rest is history. This is crazy. They're so juicy. They produce gains so consistently that you can easily fall prey to just getting sloppy with it, meaning that any red that goes down to support, I'm going to short it. And so you stop requiring the collapse. You stop requiring the wrecking ball. You stop requiring the violence. You stop requiring the crash. And then you just start looking for any red on support, and you can start getting yourself into trouble. Be aware of that trap. The way I do this play when I see it is I'm trying to always get into the violent bar. I don't care how late I am. So I'm trying to get into this bar, but I'll get into, if it's late, I'll get into it lightly. So let's say I usually do 5 lots, I'm going to do 2 lots. But it doesn't matter how late, even if it's gotten all the way to support, I'm still going to get in. And the reason is but I'm going to get in small. And I'm going to get in small because the real play is the bounce and the color change right there. That's the real play. That's where I'm going to really hit it up, looking for the crash through of support. So my biggest win is going to come on the bounce. Now, why am I so confident going in heavy on that bounce? Is because this is a tall Babylon-like tower or wall. Almost no bounce is going to take out. So I'm as close to a guarantee as possible. You can't be guaranteed, but I'm as close to one as possible that I know the bounce is going to fail. I've got the highest probability. It's happening next to Babylon. I've got the highest probability that it's going to fail. So my ads on a bounce, unless the bounce is violent, we'll get into that. My ad on this bounce for you on the color change is typically heavy. Should it work, and it works most of the time, it's a huge score. Why is it that I'm always going to go into the crash bar, no matter how late it is? Because 50% don't bounce like I want them to. Why miss out on those? Do you follow what I'm saying, guys? Why not pick up 50% of the money? Get some of it. Don't let all of it disappear. Get some of it. I used to let all of it disappear and only get the bounces, but I was missing 50% of the money. So you're going to find over time that half don't bounce. Let me give you an example of this. What you'll find is the crash into the 200. Now, some people won't catch this, but I know many of you will because I've taught you this. You should always go back to where a fluid move to the downside began. The fluid move to the downside did not begin on bar 2. It began on bar 1. That was green. And from this tippy top, it started dropping and continued. So the way I'm going to look at this is I'm going to look at it together like one crash move that started there and dropped right into the 200. Boom! No matter how late. Now, we would want this to bounce to get that heavy load, right? But look. You didn't get it. Do you see what I'm saying? No bounce occurred. With PayPal, I want to look at the 5-minute and show you the same concept. Do you see the concept on this 5-minute chart? Do you see it? So you see it starts well above. It crashes into the 200, weakening it at its foundation. It bounces. The second bar bounces. And what's that sound? What's the sound of what happens next? Give me the sound. Somebody type it. There we go. Oh, it's quick. That's crazy, right? That's a good question. Let's talk about your stops. So I teach you, when you go into something, your stop should be above. What if that's too tall? Now what's your stop? If you can't do the event stop, what's your stop now? Not necessarily. Nope. There's only 2 stops, guys. There's no half stop or quarter stop, or where'd you get that from? What program are you in? There's only event or maximum. There's no 33% stop. Where did you get these things from, guys? Are you moonlighting on me and learning from someone else? Is that it? No. You've got 2 stops, event or max. Event or max. So if you go in here and you can't do this because it violates your maximum, you must go down find where, at what point is it maximum? All right, that's my maximum loss per trade. All right, I can deal with that. Now, here's where I think some of you are getting mixed up with the third. As long as the maximum is not down here, you can do it. So where, if you can't get at the tippy top, what portion of the bar do you want your maximum to be? Top third. That's where the third is coming from. There we go. I mean, you guys are aristocrats here, huh? Look at these aristocrats. Aristocrats. Yeah, see? You got a bunch of aristocrats here. If we can't get our stop there, we find the maximum, and if it's in the top third, we can do the play. If you can't get it in the top third, then what you can do is skip the initial. Do you understand? And wait for the add. Does that make sense? Because you don't want to get knocked out on the bounce, guys. That's all I'm saying. Right.
I'm in short. Boom. I have orders through my ranges. As this continues to drop from my entry, now look at my entry. So I'm getting in around here, and we get almost $1. Almost. I got a profit take here, but not everything. I did not get everything because my profit takes are zones too. So I got the first layer of profit taking because it did not get low enough to get to the second layer. It's important to understand. Stop for me. Well, first of all, you would not want this to be breaking the new high. So if you wanted a technical stop, your stop is technical. I usually on these plays use a maximum loss per trade. So I take partial profits, and I am now willing to let this bounce on me, right? At this particular point, I'm like, I'm either going to get more profits or I'm going to get a bounce. We bounce from here. Now I'm going to draw the green because some of the green is hiding from you. Look at this bounce. And this bounce from the low, there's a green bar hiding from you there, right? That gets one or two, I think it got maybe one or two of my sell orders. You understand? It got one or two of my sell orders and then fell right away. Boom, watch this. Boom. And it fell. Read between the lines here, guys. Read between the lines. It fell all the way to here, the low. See the low? Now there's a red bar hiding from you there. I get in again, and boom, I take more profits. Now, my profit here on this part is really quite sizable now because remember, I initially get in here, I only take partial profits there. Then I get two more additional lots in addition to the original one. So I'm now heavier than ever. I'm heavier than ever now. Okay? And then this drop explodes my profitability. And so I get out of almost the whole trade here. I get out of everything except a couple hundred shares, which I don't worry about. Okay? So I close the trade here. Now, why do I do that? Because for me, my first goal, guys, is a micro whale. Micro whales take care of my life, guys. So look, drop, boom, that's profit, boom, more, that's profit, boom.